In today's video, I'm going to give you a housing market update. So we're going to cover home prices as well as mortgage interest rates. So these are the types of articles that are circulating again. So this one's from Yahoo Finance in April. When will the housing market crash again? Okay, so as you know, there's been a lot of policy moves by President Trump, and it's been affecting the stock markets, the bond markets. So I'm sure that people are very curious to see how it's been affecting the housing markets. So let's take a look at the data. So for the month of March, the median sale price of a home in the US is at $431,078. Home prices have gone up by 1.5% month over month. And home prices are up by 2.5% year over year. So have home prices crashed? No. Are homes still unaffordable for millions of Americans? Yes. Is anything new? Not really. Now, I want to show you this. So this is the number of homes sold each month over the past 5 years. And it's down 2.9% year over year. I'll tell you, that's not surprising because when you have home prices this expensive and interest rates this high, this is going to result in less buying and selling activity. So essentially, sellers won't drop prices, buyers don't want to overpay, rates are locking both sides in place. So it's a stalemate between buyers and sellers, which is, that's what's freezing the housing markets. Which is why you're seeing headlines like this in the media. Okay, now I want you to take a look at this. So look at the number of homes for sale. So this is the supply side or the inventory. So it's actually gone up by 15% year over year, which is a big percentage jump. However, as you can see, it's not risen to extraordinary levels. And just so you know, back in March of 2019, so we're talking about pre-pandemic, the number of homes for sale was at 2.2 million, which is represented by that red line. So right now it's at 1.8 million homes for sale. So yes, this is an improvement. However, it's nothing crazy. And where we are today, it's actually low, historically speaking. So I want you to look at this chart. This chart goes back 13 years. And look at the vertical line that I drew. And that is March of 2019, 2.2 million homes for sale. And that's not even close to the highest it's ever been. So this is why we're not seeing a flood of sellers, as some of the headlines are making it seem to be, which is why home prices are not crashing. So I hope that makes sense and explains the situation. And I want to show you this. 27.1% of homes are still selling above list price. So this is within the normal range. So you can see how out of control that it got in 2021 and in the first half of 2022. So right now, it's definitely not a seller's market like it was back in 21 and 22, but it's also not a buyer's market either. Now, let's move on to mortgage interest rates, and then we're going to come back to home price expectations for 2025. So this is a chart from the Federal Reserve, and it's a 5-year chart to give you some context. So the average interest rate right now on a 30-year fixed is at 6.9%. Now, I do want to point this out to you. If the economy weakens and we get a recession, then that would put downward pressure on home prices, right? However, if the economy weakens and we get a recession, then they would lower interest rates, which would put upward pressure on home prices. So I just want to tell you that that is the relationship between home prices and interest rates. And I actually made an educational video about this not too long ago. However, we're going to see which force has a greater impact on home prices and by how much. Now, I just want you to be aware that the Federal Reserve expects to cut interest rates 2 times this year in 2025. And if they do that, then that's going to put downward pressure on mortgage interest rates. However, if they do that, it's not going to get us down to the 3 to 4% range for mortgage interest rates because they're talking about cutting the Fed funds interest rate by a smaller amount. They're talking about cutting it by a quarter point each time. So in total, 0.5%, half a percentage points. And I know that some people are going to say that the Federal Reserve has no power over mortgage interest rates because they only control the short end of the rates and not the 10-year yield. But you know what? I'm just going to be honest. That's what someone from academia would say, but that is not how the real world works. So I'll tell you that the Federal Reserve has complete control over mortgage interest rates by lowering the Fed funds rate and by buying bonds. Like, who are we kidding? Now, I want to show you the expectations, and this is coming from the CME Fed Watch tool. So the next Federal Reserve meeting takes place on May 7th, and there's a 92.6% chance that the Federal Reserve does not cut interest rates at that May meeting. Now, the Federal Reserve, they're going to have their subsequent meeting on June 18th, and it's at this meeting where people are expecting the Federal Reserve to lower interest rates. So the market is saying that there's a 52.4% chance that they're going to lower rates by a quarter point by then, and a 3.9% chance that they're going to lower rates by half a point by then. Essentially, there's a 56.3% chance that the Federal Reserve is going to cut interest rates by then, by that June meeting. So I know that that's far from a sure thing, but the odds are currently in favor of a rate cut. But I just want you to be aware that these probabilities, they change and they can have some violent swings. So from now until that June meeting, there's going to be a lot of time for sentiment to change, for these odds to change. Now, going back to this headline, and with you now having some more context to the data, for a housing market crash to happen, the data needs to show that, it all boils down to supply and demand. The data needs to show that the supply of homes is overwhelming the demand for homes, but that is not what the data shows. And I want to tell you this unfortunate truth if you're trying to time the markets in terms of home prices. If there's a housing market crash, from the start of the crash to rock bottom prices, it takes years. So in the last housing market crash, it took 5 years. So if you're trying to buy a home at rock bottom prices, and if the crash started today, then you may be waiting until 2030 to get the best prices. So I just want to throw that out there so you know how it is. Now, what should you do if you're on the market right now to buy a home? And this is what I've been telling everyone since 2021. It's going to be the same thing. That you should shop around for a deal. And this process is going to take months, if not longer than a year. And if you find a good deal, then I would say buy the home. Don't try to time the markets. And once mortgage interest rates fall, then that's going to be your opportunity to refinance. So is all of this, what I just said, is that easier said than done? If you ask that question, I'd say, of course it is. It took me, personally, almost a year of shopping around and multiple failed offers to buy a home. It was a process. But at the end, I'm just so happy that I did. And I want to give you the housing market predictions for 2025, and this is coming from the big institutions. So the National Association of Realtors, they're expecting that for 2025, the home prices are going to appreciate by 2%. Zillow says that home prices are going to go up by 2.6%. JP Morgan, 3%. Housing Wire, 3.5%. Fannie Mae, 3.8%. And CoreLogic, 4.1%. So as you can see, the expectation, it's in the 2 to 3% range, which is actually slower than usual. So that's your housing market updates. If there's any red flags or if things start to fall apart, then I'll be sure to warn you. But until then, right now it's the same thing. It's just a stalemate between the sellers and the buyers. Thank you so much. Please subscribe. I appreciate the support and I wish you a very nice day. Take care.